Stock option trading for beginners. How I make over 1,600 in 1 hour. I'm going to show you my losing trades, my winning stock option trades, how I trade a put credit spread. Options are very volatile. Do not trade options before studying deeply and patiently about options. If you want to know how to get to the best places in the easiest and cheapest ways, subscribe to my channel, Rich Freedom Tracker, Facebook, YouTube, Instagram, TikTok. This week we only have 4 trading days because Friday is a Good Friday, public holidays. Stock markets was closed. If you look at the past 5 days, this shows the last Friday. Basically, last Friday the stock market was up, but from beginning Monday, stock market went down. So April 3rd, it went down, it went back up again. April 4th, Tuesday, it went down. On Wednesday, it went down. But on Thursday, just before holidays, stock market went back up a little bit. So overall, the last 4 trading days was not so good. It was more down days than the up days. Nasdaq, the same way. Last Friday it was up, then Monday it was down, it went back up again. On Tuesday it went down. On Wednesday it went down a lot. Wednesday it was down over 1% for the Nasdaq. But on Thursday, just before holiday, it went back up again in the afternoon. Remember, it's very, very important. Tuesday and Wednesday, April 4 and April 5, it was down. I'm going to show you how we can make money even though the stock market was down. Look at Dow Jones. It was up mostly on last Friday. Then on Monday it dipped a little bit. On Tuesday it dipped a lot. On Wednesday it just fluctuating. On Thursday it went back up a little bit. So basically it was unchanged for Dow Jones. Let's look at how much I made in 1 hour. April 3rd, I made over 900 in 1 day. I spent only about an hour of trading. And on April 4th, let's look at how much I made. April 4th, I made over $970. On April 5th, remember, April 5th, it was down a lot. Look at that, April 5th, Nasdaq was down, and S&P was down, and also Dow Jones, except for Dow Jones. We know that stock markets were down on Wednesday, so April 5th, Wednesday, let's look at how much I made. Over 1,600. It's because in stock option, you can make money when the stocks are going up. You can also make money when the stocks are going down. You can also make money when the stocks are fluctuating and they don't do nothing. Then you still make money in options. That's one thing that I like about stock options. If you buy stocks, the only way you can make money is if the stock is going up. If the stock is not going up, if the stock goes down, you lose money. If the stock just fluctuates up and down, don't do anything, you still lose money. But in stock option, you can make money in every direction possibly that you can. On Thursday, how much I made? The stock market was up, but I made only 560. If you look at it, sometimes you need to wait to take profits. If I had taken profits, my profit would have more than 1,000, I'm sure. But I am waiting for some of my options to make more money. So in trading, you need to know when to wait, when to be patient. You need to know when to cut losses quickly. This is very, very important. So of course, I was mad. I could have made over 1,000. It's only $400 difference. I could have made over 1,000. In 4 days, how much did I make? I made over 4,000 in 4 days. That's pretty good, right? If you made 4,000, you can travel around the world. You don't need to worry about it. It's just 1 week income. How to trade put credit spread? Go to your stockbroker platform. I use Robinhood as an example. You can use any stockbrokers. Look for Meta platform. Then click on Trade Meta options right here. It's going to show a list of options available. Click put. Then we want to sell put. Put credit spread. What does it mean? It means that you sell one put and you buy another put and the difference between the prices, the premium, is what you get. Expiry date is April 14. Let's say we want to choose 205. You will notice that the lower the strike price, the lower the premium. So basically, we can choose 205, sell 205, then we can buy back at 200, 0.35. So the difference gonna be the premium is $42. You will get $42. What is your maximum loss? Your maximum loss could be 458. How do you get that? Basically, the maximum amount that you can lose minus the premium you get is this amount, 458. Of course, you need to study very closely about put credit spread. Put credit spread can be risky. You only want to trade stocks of great businesses. Never trade penny stock. Never trade pharmaceutical companies because those stocks can drop a lot, then you can lose a lot of money. So basically, if the stock is going up, then you want to do put credit spread, then you have a higher chance of making profits. So you want to ask, what are the risk rewards? You get only 42 bucks and maximum loss is 458. The risk reward is not that much, right? But the probability of me getting those premium is higher than the probability of me losing. If you know how to choose the right stock and how to get in at the right time, it's very important. So let's say I get only $40 every day. So 5 trading days, every week I could possibly get $200 in my pocket. That's easy money. Of course, choose the right stocks of the right company. Do not choose bad companies. Bad things can happen at bad companies. And how I could lose money? If Meta stock price dropped to 205 or lower, I could lose money. Or expiration date April 14. As long as Meta stock price doesn't hit 205 or lower, that $42 is mine. So it's very easy if Meta stock price keep going up and do not drop. But if it drops to 205 or lower, I could lose amount around $500. But it could be more if you don't know how to do it. So it's very important. You need cut loss. As long as you see that the stop price is dropping and your expiry date is getting nearer, you want to sell it really quick. Do not wait until expiry date. And do not wait until the last minute either. So your broker could force you to sell put credit spread at a loss. If you wait until last minute and the stock price is dropping below 205 and you don't have enough money to cover, it's very important. If you want to take more risk and you want to get more credit, you can choose to 195. So in 195, if you choose 195, your maximum loss jump to 941 and your credit jump only to 59. So the jump in credit that you receive does not make sense for the risk that you are taking. So usually I only take 5 strike price difference. So if it's just 5 strike price, 400 or 500, that's something that I can take. And you don't need so much money to trade put credit spread. That's one good thing about put credit spread. All I need is just $500 just to cover maximum loss. And I can start trading put credit spread, collecting money, $200 a week if my guess is right, if my bet is right. I hope you enjoyed this video. Like, share, subscribe. If you have any question, comment down below.
Do you want to retire early? Do you love freedom? Do you want to work only 1 to 2 hours a day while traveling around the world and spend more time with your family? You can start stock investing and option trading right now.
If you want to know more about finance, stocks, options, real estate, crypto, check out our playlist. Stock investing, stock trading, option trading, real estate, cryptocurrency.